how to invest in the stock market for beginners, Sabri vlog. Investing in the stock market can be an exciting and potentially profitable venture. Here are some steps to help you get started as a beginner. 1. Educate yourself. Before diving into the stock market, it's crucial to understand the basics of investing. Learn about different investment vehicles, such as stocks, bonds, mutual funds, and exchange-traded funds, ETFs. Familiarize yourself with key investment concepts, such as risk and return, diversification, and market fluctuations. There are plenty of online resources, books, and courses available to help you build your knowledge. 2. Set financial goals. Determine your financial objectives and time horizon for investing. Are you investing for retirement, a down payment on a house, or other long-term goals? Understanding your goals will guide your investment strategy and risk tolerance. 3. Establish an emergency fund. Before investing in the stock market, it's crucial to have an emergency fund. Set aside 3 to 6 months' worth of living expenses in a liquid and easily accessible account, such as a high-yield savings account. This fund acts as a safety net, protecting you from unexpected financial challenges. 4. Create a budget. Assess your financial situation and create a budget to determine how much money you can allocate towards investing. It's essential to have a clear understanding of your income, expenses, and savings to make informed investment decisions. 5. Choose the right brokerage account. Select a reputable online brokerage account to facilitate your stock market transactions. Consider factors such as trading fees, account minimums, research tools, customer service, and user-friendly platforms. Popular brokerage platforms include Robinhood, TD Ameritrade, Fidelity, and Charles Schwab. 6. Start with a Roth IRA or 401k. If you have access to employer-sponsored retirement accounts like a 401k or individual retirement accounts, IRA, like a Roth IRA, it's advisable to contribute to them first. These accounts offer tax advantages and should be prioritized due to their long-term growth potential. 7. Diversify your portfolio. Diversification is a key risk management strategy. Instead of investing all your money in a single stock, consider spreading your investments across different sectors, asset classes, and geographies. This way, you reduce the risk of losing all your capital if one investment performs poorly. 8. Research and select stocks. When selecting individual stocks, conduct thorough research. Look into a company's financial health, earnings growth, competitive position, and industry trends. Pay attention to news and market developments that could impact the company's performance. 9. Start with index funds or ETFs. As a beginner, it's often recommended to start with index funds or ETFs. These funds track a specific market index, such as the S&P 500, and provide diversification by investing in a basket of stocks. They offer a low-cost way to gain exposure to the stock market without the need for extensive research. 10. Practice risk management. Investing in the stock market involves risks. Set realistic expectations and be prepared for market volatility. Avoid making impulsive decisions based on short-term market movements. Regularly review your portfolio and make adjustments based on your financial goals and changing market conditions. 11. Continue learning. The stock market is dynamic, and learning should be an ongoing process. Stay informed about market trends, economic indicators, and new investment opportunities. Consider reading books, following reputable financial websites, and seeking advice from experienced investors or financial advisors. Remember, investing in the stock market involves risks, and it's essential to make informed decisions based on your financial situation, risk tolerance, and long-term goals.
Thank you for your joining us. Please subscribe, like, and follow our social media channel. If you feel this information will be useful to you or someone else, please share this video. Comments with your thoughts and questions.